And well, today was another important day where the RBI lowered the interest rate for the first time in 6 months. The central bank has unanimously voted to reduce the repo rate by 25 bips to 5.25% while retaining policy stance as neutral. Governor Sanjay Malhotra led RBI has also raised India's FY26 GDP outlook to 7.3% versus a previous guidance of 6.8%. The RBI has also lowered retail inflation target for current fiscal to 2% from a 2.6% it had projected in the month of October.
Globally, contrary to earlier expectations, growth has been relatively strong. Evolving geopolitical and trade environments, however, continue to weigh on the outlook. Inflation paths remain divergent, with headline inflation remaining above target in most advanced economies. Pressures in most emerging markets, however, are contained, providing them the room for accommodative monetary policy. Growth, while remaining resilient, is expected to soften somewhat. Since the October policy, the Indian economy has witnessed rapid disinflation, with inflation coming down to an unprecedentedly low level. For the first time since the adoption of flexible inflation targeting, average headline inflation for a quarter at 1.7% in Q2 this year breached the lower tolerance threshold of 2% of our inflation target. It dipped further to a mere 0.3% in October 2025. On the other hand, real GDP growth accelerated to 8.2% in Q2, buoyed by strong spending during the festive season, which was further facilitated by the rationalization of the GST rates. Inflation at a benign 2.2% and growth at 8% for the first half of this year presents a rare Goldilocks period.
And well, the MPC's 25 bips rate cut will ease the EMIs, improve affordability and lift demand in housing, autos, MSMEs and consumer sector. Let's get in Raghav to break down how the rate cuts reshape the sectoral outlook.
I mean, the impact of the RBI's 25 basis rate cut will have on a lot of wider sectors. When we are talking about housing and real estate, it's going to have a positive impact for sure, as lower EMIs will be unlocked for new home buyers and anybody looking out for a home, buying a home at this point, it's a good time to go ahead. Second sector that's going to be impacted positively is going to be automobile sector, as EMIs again will be lower for this particular, these purchases for the consumers, and better financing will be unlocked for the consumers. In terms of MSMEs and SMEs, they will also be impacted positively, as cheaper credit will now be accessed by the consumers and faster growth potentials will be unlocked by these rate cuts. In terms of the banking sector, there we're going to be seeing a mixed response because near-term margin compressions are expected. But one thing's for sure is that deposit repricing will be experiencing certain form of reliefs. In terms of NBFCs, again, there will be a mixed response because lowering consumers will be experiencing lower borrowings at this point. In terms of agriculture, Shisha, I believe there is going to be a positive response in terms of this particular industry, as enhanced credit access with KCC will be accessed by farmers in this particular sector. Even consumer durables at this point will be positively impacted, as higher disposable income for consumers will be unlocked by these rate cuts. In terms of consumer discretionary products, they will also be positively impacted because people will have more funds in their hand to go ahead and invest in their own things. When it comes to infrastructure, I believe it's going to be positively impacted again, as cheaper capital for new projects will be unlocked by these rate cuts. When speaking about insurance is going to have a mixed response because premium affordability will be improved for consumers, but net impact will be seen in the coming foreseeable future. Speaking about retail and e-commerce, that's going to be a positive for sure for this economy, for this particular sector, because increased consumer spending, again, anywhere consumer spending where it's involved, we're going to be seeing a positive move. In terms of tourism and hospitality, again, that's another sector that's going to see a positive move. Because of these rate cuts, writ large in terms of speaking, the impact of these rate cuts on larger sectors, there is going to be a positive impact for sure. The GST push, the rationalization, all of that, along with that, these rate cuts are going to have an impact for sure, a positive one.
All right, shifting focus to the